Friends, hello, hope you are well. I just want to I'm dropping my stuff here. I just want to make a quick little short video, hopefully short video here, talking a little bit more about SoFi and Applied Digital. I'm not going to go in depth with stock chart, like a candlestick chart here or anything, because these stocks are still very much in a growth pattern. They're looking for new ground. They're moving up. They're both in very, unique, moments in their life as companies, stocks. SoFi has been killing quarterlies. Applied Digital has been doing tremendous last 2 years as a new company. These last quarterlies, how they've unveiled them, they're great with everything said, because they're just the company is bringing in all this big new revenue. So there's arguments for both of them that they're going to be very unique companies to continue to hold here and do very well for investors. I think SoFi undoubtedly is very much in this safe realm right now, where these are big boy stocks. These are going to do probably very well for a lot of investors as we continue into the future here. So I do want to watch two videos, not long, reaction, because I don't know how many people actually watch. I love watching other people see what they're doing, where their head's at. I don't think anyone should ever invest alone. I don't mean like physically you're investing with someone else, but I mean just like listen to other people, see where their mind's at, what's going on, see what they saw in the picture that you didn't see, kind of. And that's kind of where I'm going with all this. So the first one I want to dig into here before we go into individual stock talking here, let's look at Tom Lee and what he just said about the market. He's going to talk about Ethereum a little bit too, but kind of really focus on this first part here, and then we'll go into the next one.
Why don't we start off with the markets hitting new record highs once again after that CPI report that, in all honesty, it was kind of mixed. Headline was better than expected. Core was just slightly hotter than expected. What's your take on that?
Well, I think it's just a reflection of the fact that the market was bracing for a hot CPI, knowing that not only was the Fed, but economists were warning that we'd start to see inflation coming through in the July CPI report. So I think it was actually elevated compared to where it was in June, but I think it was much better than expected. So it's one of those rip off the Band-Aid moments.
All right. We were showing the CME Fed Watch tool earlier, just under a 95% chance of a cut coming up in September, being priced in by bond traders. That rate cut, what area of the market does it benefit? Does it definitely just benefit the cyclical sectors? What does it mean for the tech trade, et cetera?
To me, there's a whole area of the market that gets sort of lit up when the Fed gives sort of that all, dovish signal, or, Fed is resuming its cutting cycle. And I think that's things that benefit from liquidity. So that's financials, small caps, and also, believe it or not, Bitcoin.
Oh, Bitcoin. All right. That's interesting. By the way, potential rate cut. We've often thought we're going to get those rate cuts, and they don't actually happen, even though they're being heavily priced in right now. With that,
That's right.
I want to get to your word of the day. What's your word of the day today, Tom, and why?
The word of the day to me is breakaway. And the reason I'm saying that word is that in early July, Bitcoin made a breakaway move, and I think Bitcoin has been leading the markets by a month. So believe it or not, I think that this is the month that the S&P, makes new highs towards 6,500, 6,600.
Crazy.
Interesting. So you think we hit new highs this month? What's the catalyst? Because, we're pretty much through earnings season. So what pushes us higher other than a lot of optimism over a rate cut coming up?
Frank, I think part of it is positioning and sentiment, because I think investors were thinking this is the dog days of August, and that we'd be getting some hawkish inflation data. So I think some of that's just the relief that, in fact, CPI was better than expected. I think it's also just follow through, because we've had a pretty decent earnings season, and at the end of the day, the economy is holding up pretty well. And I'd say that it has a lot to do with the fact that August will probably be a surprise and markets are going to be stronger.
All right. Tom, you didn't send us a pick, but I'm going to guess that BitMiner might be your pick today. It's a company that you're involved with. I want to talk to you about Ethereum and also BitMiner.
All right, I'll stop that one right there. But Tom Lee goes on to talk about Ethereum, which I could talk about Ethereum and Bitcoin all day. So essentially, Tom Lee thinks too that the S&P 500 will end around 7,000 points this year by December, and there's a lot of evidence to support that right now. And his theory with that is that these AI companies, a lot of companies in general, are just pushing out more revenue, and the S&P has kind of been lagging behind, and now we're finally seeing it catch up. Not to mention, we could be talking about multiple rate cuts this year with what's going on, which the next video will kind of go more into. But, this is why I have been saying, if you have been thinking about getting into SoFi, and obviously rate cuts are not solid, we don't have a firm answer at this point, but I think if there was a moment, this is probably going to be the moment here in September, you have a moment with SoFi to leapfrog into some very high numbers with SoFi, okay? So SoFi still being this $20 stock, undoubtedly, it will, if we get a rate cut and another rate cut, SoFi could be swinging into $30, $40, $50 here. Especially with, the Q3 that will be coming out with it. And it's pretty much, we know at this point, it's going to continue. SoFi is in such a growth stage right now. It's going to continue to push out these growth patterns with revenue 100%. And, I really think this is going to be a key moment in the history of SoFi right now with stock share price, that we are about to see some heavy pushing with SoFi. And I see it. I'm gonna play it out, and I either people are gonna play into this, they're not. But I really think this is a key moment before some big things happen here in the market. People keep getting fooled by this market. People are wanting a bear market right now. They're not getting a bear market. We are getting a bull market, and people are having a hard time catching up with it because it just keeps going. And if they unleash rate cuts here, we are about that 7,000 point range for the S&P 500. You think stocks are expensive now, you just wait, okay? You just wait to what's coming here. So let's watch this next video. It'll go a little more into rate cut talk, and I think it's a really good video.
Environments we've seen in some time for investing in both stocks and bonds. Anastasia Amoroso is Partners Group Chief Investment Strategist for Private Wealth and is here with us on set. Got a lot of play on this call that Rick Reeder made yesterday, sitting in this very chair. Do you agree with him?
I do. I think this environment has a lot of positives to it. And, coming into a couple of weeks ago, we were debating this quarter of adjustment and the fact that companies had to absorb the tariff increases. But now coming into this week, it's all about the rate cuts, and maybe not just one rate cut, but a series of rate cuts. And I think there's potentially a scope for 2 or 3 this year. So that does change the narrative quite a bit, because it really cushions whatever softness we're expecting to see in the third and fourth quarter.
Do you think there's better value in stocks or bonds right now?
Look, I think we're not that far away from neutral rate. I don't think we're that far away from terminal rate. So maybe we get 75 basis points or 100 basis points of rate declines, and surely that props up the bond market. But I do, generally speaking, see more value in the equity markets, both public and private. I think you have a lot more innovation. I think you have a lot more room for earnings growth and potentially for earnings revisions. And Scott, moments like we had earlier today, and also just the IPO market in general this year, it's actually perking up. We're about 21% year over year in terms of IPO activity, about 30% in terms of M&A activity. So it does tell me that there's this value unlock that is likely to happen from this crossover from private to public markets.
Are there any feelings of euphoria that you would be concerned about when you see? This has nothing to do with the merits of a company like Bullish. They're obviously in the right place at the right time with a business that the market deems to be in a high growth area that's fast being deregulated. So I can see why this is up the way it is. Many of the other IPOs that have come public have done the same thing.
Yeah.
There are several, meme-like names within the public markets that have traded crazy in the last several months. Does any of that give you pause?
Not on a broad scale. And I say that because if you look at the average IPO, that IPO this year, over $1 billion, it's up about 50-60%, depending on the day. And I think there's a lot of strength to those companies that have waited to go public for a long time. So there is the maturity stage of some of those companies. There's also the revenue and the earnings growth. So I wouldn't say broadly there's this degree of exuberance. I will say, Scott, that clearly there's a mispricing everything that's happening in the IPO market right now. And the fact that some of the companies are surging as much as they are suggests that demand is incredibly strong for some of these growth stories for both retail and institutional investors. And so I wouldn't necessarily say that's a sign of euphoria. Perhaps it is a sign of clarity. If you think about, why we're having this success with the IPO market is finally we have clarity around tariffs, whether we like the rate or not. Finally, we seem to be approaching clarity on what the Federal Reserve is going to do in the fall. And the U.S. economy, fine, it's slowing, but it's still growing at close to 2%. So that's a lot of certainty for those CEOs looking to take their companies public.
Are you a believer in the broadening story that some are now trying to tell again?
I am. I mean, look, financials, for example, is a sector that stands out to us, and that's really benefiting from all the trends that I discussed. The capital market activity is picking up a lot. If you look at consumer spending, the real-time data is showing 4 or 5% consumer spending growth in terms of credit card spending for the month of July. So, by the way, we get retail sales later this week, and I think that should be a fairly robust number. If you think about industrials and the big, beautiful bill that was passed and the incentive that is for industrial activity. So I do see many growth drivers. And then on top of all that, Scott, there's, of course, the AI data center story. CoreWeave, fine, is not doing so well today, but we're big believers at Partners Group in the AI data center opportunity. If we look at some of our portfolio companies, like EdgeCore, for example, it is absolutely a platform for data center growth for hyperscalers. And AI data centers is exactly what they're building and scaling, because that's a much faster rate of growth than what you see generally in data centers.
All right, we'll leave it there. Thanks for being here.
Okay, so key takeaways with that, both these rate cuts. Okay, S&P still growing. A lot of that has to do with SoFi. A lot of that has to do with SoFi. Okay, the other part of this too is that with that conversation, the data centers. Okay, data centers, Applied Digital. So talking about Applied Digital. We have Applied Digital who, these quarterlies this year, and they release their quarters a little different, but what we have seen so far this year has been a little bit of a, back and forth situation, kind of hard to pinpoint exactly where the new revenue stream is 100%, but nonetheless, still in a very new, big revenue stream, Applied Digital. So it's a very strong argument right now that these data centers / tech stocks, Applied Digital in that conversation, what is down the road for? And this is where we can say that this stock could just really continue to jump with revenue a lot. I mean, obviously there's more data center companies than Applied Digital here, but Applied Digital being so young, so finding a lot of money at this fast rate, and if this continues, this is going to be a very, kind of like, fairy tale story for a lot of investors, where they'd be like, God, I'm glad I got into the stock when I did. Applied Digital is still not 100% guaranteed. Very rocky quarterlies, but it's got a lot of people's attention. SoFi undoubtedly is going to climb to new levels. So with all that said, friends, I wish all of you best of luck, and I hope that helps someone. I really do mean that, and I will talk to you soon. Bye, everyone.